beating expectations even as revenue growth moderated to a decade-low pace. My colleague Snehi is joining us to walk us through the earning details.
Well, yes, overall a good set of numbers coming in for Trent's Q3 FY26. If you take a look at the standalone revenue, that's come in at 5,259 crores, slightly ahead of the company's Q3 update estimate of 5,220 crores and an uptick of 16% on a year-on-year basis. Slightly weak in terms of the kind of revenue deceleration that we've seen, but yes, largely in line with what the street was estimating. And we'll get to that revenue slowdown, the growth slowdown in just a bit. The EBITDA has come in at 1,073 crores, an uptick of 27.3%, a beat versus the street's estimates. Net profit at 640 crores is up 36.3%, but this net profit was largely aided by other income that is up 3 times on a year-on-year basis at 153 crores compared to 51 crores. So yes, but on the back of this, nonetheless, the net profit is a beat versus the street estimates too, and the EBITDA margin has expanded very smartly, 20.4% compared to 18.6%, an uptick of 180 bips. Once again, a beat versus the street estimate of around 19.6% or even slightly lower than that. If you take a look at Trent's revenue growth in Q3 FY25, this number was 40% and it's come down all the way now to 16% in just a year, and analysts estimate that the 16% revenue growth is the slowest for Trent in at least a decade, of course barring the COVID years. The labour cost impact that the company has seen has been classified as an exceptional loss of roughly 26 crores this time around. But talking about the store count, 17 stores were added for Westside and 48 for Zudio in Q3, taking the total to 278 for Westside and 854 for Zudio, with 4 stores in UAE and other lifestyle concepts at 32 stores. The portfolio now has over 1,100 large box fashion stores with presence across 274 cities. Footprint is over 15 million square feet across their fashion brands. The Star business on the other side, 79 stores in total, 6 added and 5 closed in the 9 months of the financial year. And Noel Tata, the chairman of Trent Limited, says that the customer sentiment is gradually improving. Business outlook for the medium term continues to remain positive. Focus continues on portfolio growth. They're looking to expand the business of Star, and they're also seeing and they're convinced that the Star business is well positioned to deliver growing consumer value. So yes, that's the take coming in on Trent's Q3 revenue, more or less in line with what the street was estimating, even though there's been a deceleration once again. But yes, the PAT net profit, the PAT EBITDA and EBITDA margin are a beat versus the street estimates.
Now, moving on, Apple is gearing up to expand its retail presence in India. ET now exclusively learns that India's Pearl City, Hyderabad, is all set to get its first Apple retail store, making it the 7th store in India. Sumita is here with the exclusive details.
That's right. Exclusive sources are telling us that Apple has plans of further expanding in India as far as its retail presence is concerned. In fact, the next store is going to come up in Hyderabad. Exclusive sources have told ET now. In fact, this store will be Apple's 7th retail store, and this will go live in early 2027 in an upcoming mall in Hyderabad. In fact, the same has also been indicated by job postings of store leader, senior manager and a genius amongst others. Now, retail expansion is part of Apple's broader India strategy. Apple launched the Mumbai and Delhi stores in 2023. The Pune, Noida and Bengaluru stores were launched in 2025. One additional Mumbai store is coming up in Borivali as well. In fact, the new Hyderabad store is also going to be working on the same format as other stores, and it will feature Apple products, accessories, personalized assistance from specialists, hands-on service sessions, repair support and repair and device services as well. Now, Apple's retail expansion plans, well, this is in addition to Apple's manufacturing, which has been consistently scaled up over the past couple of years. In fact, iPhone exports from India, they crossed $50 billion in December 2025, and iPhone exports crossed approximately $16 billion in the first 9 months. And these manufacturing units are operated by Foxconn and Tata. And of course, the company has also plans of expanding its export operations as far as electronics components are concerned. In fact, Tim Cook has been rather bullish, and he has consistently stated what he thinks about the India market in one earnings call after another. In fact, in the latest one as well, which was in Q1 FY26, he said that, and I quote, "We set quarterly revenue records on iPhone, Mac and iPad and an all-time revenue record on services." So it was a terrific quarter in India. But now this one retail store coming up in Hyderabad, well, this is going to be a shot in the arm as far as Apple's retail expansion plans here in the country are concerned.
Now, markets extended their positive momentum for a third straight session as Nifty 50 closed up around 25,776, gaining roughly 48 points in today's trade. The Nifty Bank Index also continued its uptrend with healthy support from bank stocks, helping broader markets shine. Mid-caps and small caps outperformed with solid gains, while volatility on the Lal Street eased, with India VIX cooling off through IT and pharma were the notable laggards on the sectoral front. IT stocks bucked the market rally as Nifty IT slumped over 5.5%, with every constituent ending in the red, dragged down by sharp cut in Infosys and TCS. Nehi joins us with more details on how the markets fared today.
Well, yes, overall quite a flat day coming in for the index. The Nifty saw about 0.2% gain, so nominal gain, but managed to close around the 25,775 mark for the Nifty. The gains that we saw on the back of the US-India trade deal announcement earlier, the market was able to sustain those gains, hold above those gains, yes, for sure, but very flat moves coming in, just 0.2% uptick on the Nifty. Sensex was also higher by about that much, so not much happening over there. The Nifty Bank did pretty well for itself, with 0.3% uptick coming over there. So talking about some top Nifty gainers, it was Eternal up 5%, Trent up 4.5%, in fact up 5% as well. ONGC, Adani Ports, Power Grid, NTPC, Max Healthcare, all of these were in focus and good moves over there. On the flip side, the top 5 losers from the Nifty all belonged to the IT pack. Infosys was lower by 7.25%, TCS 7% cut, HCL Tech Mahindra, Wipro were all down by 4 to 5% each. This on the back of those Anthropic AI new tool features. That was the reason why IT was under pressure. This was followed by Axis Bank, Kotak Mahindra Bank and ITC. These were the top Nifty losers. Broad end of the market did pretty well for itself. The mid-cap index was up 0.6%, but the real outperformance was by the small cap index, 1.25% uptick coming in on that front, and that held the market breadth quite nicely. Sectorally, Nifty Energy did very well for itself, followed by Nifty Metal, 1% uptick coming in on auto, metal and energy. After that, Nifty Realty was up by another 1%. PSU banks did well for themselves. Nifty Bank, FMCG, all of these were gaining sectors. FMCG was absolutely on the flat line. On the flip side, 2 sectors that closed in the red were Nifty Pharma and of course Nifty IT. We've spoken about the massive cut over there. From the Nifty Metal pack, it was names like NMDC, Vedanta, Hindustan Zinc, SAIL and of course Lloyds Metals. How can we not talk about that one? A 10% uptick on that stock on the back of strong earnings and expansion plans. And on the flip side, it was not only the Nifty companies, it was also the broader end and the mid-cap companies from the IT pack that saw beating OFSS, Tech Mahindra, Persistent, Coforge. All of these stocks were also down anywhere between 3 and 6%, so watch out for that as well. From the broader end, it was names like BLS International, Sapphire Foods and Devyani on the back of good earnings of Devyani were up 6 and 7% each. IDBI Bank, Keynes, Dixon Tech, Amara Raja, PFC all did well. On the flip side, some pressure on eClerx, Latent View, Triveni Turbine, Coforge, Hindustan Aeronautics, of course, on the back of that news flow coming in, wherein the clarification came from the company that they would not comment on the matter since they do not have a DRDO update from the ministry. But yes, that stock was also heavily under pressure, about 6% cut. Happiest Mind, Century Plies and Green Ply on the back of slightly weak numbers were also in the red. So yes, that's the roundup of the market. Absolutely flat show coming in. But yes, gains that we saw, that 2% up plus uptick that we saw on that trade deal signing announcement, that was held and that momentum was held by the market quite nicely.
Now, Nifty IT was the top sectoral loser in trade today, sliding nearly 6%. Ishika joins us now to tell us what triggered such a sharp fall.
After Anthropic announced this legal workflow model, US software stocks fell sharply, along with Infosys as well as Wipro ADRs that day. It also triggered a $285 billion wipe-off across software, FinServ, as well as asset management companies in the US on Tuesday. Now, investors had rushed to exit even marginally exposed names. And in terms of Indian IT also faced a major sell-off, with the Nifty IT opening sharply down, almost 6% down, and companies such as TCS and Infosys were down 7% today. Coforge and LTI Mindtree were down 6%, Infosys and Persistent were down 5%, and other companies such as HCL Tech, Wipro, Tech Mahindra and Oracle were also down 4%. Now this tool of Anthropic has had a major impact on Indian IT because Indian IT companies sell process execution and AI remains the biggest threat against it. Now, this has caused a broad-based sell-off in the sector and all 10 of its constituents were in red today. Now, this tool poses a medium-term structural pressure on labor-intensive service lines, especially in IT, and it might also trigger price reset demands from clients and cap on margin expansion targets as well. So this could lead to demand compression in IT, posing a great risk. Back to you.
Ishika, wait right there, and tell us what exactly caused the pressure on tech markets. Let's hear it from you.
Anthropic just launched a tool that has disrupted the software as well as IT industry globally. Now, for some context, it had earlier launched Claude Cowork and then released 11 open source plugins for it. Now, one of these plugins is a legal workflow automation module that has disrupted the industry. Now, here's something that you should know about the plugin. It is designed to help with legal tasks, especially compliance tracking as well as reviewing legal documents using AI. Now, what this will do is it will automate work that legal departments and attorneys currently outsource to traditional legal software systems as well as IT companies. Now, this is important because it poses a structural risk to the SaaS business model. Now, Anthropic's tool could start doing the entire business processes that previously required specialized software or human labor. And another thing to note is that this is not a separate proprietary legal engine. It uses the same core Claude model. That is, Gen AI can do legal work just by changing instructions, right? This challenges the entire model of SaaS, and AI can do it cheaply as well as easily, right? And this has raised fears of AI replacing whole classes of software products and services rather than just complementing them. Back to you.
Now, moving on, SEBI chairperson Tuhin Kanta Pandey elaborates on the measures taken to accelerate capital formation. Let's listen in.
Fundamentally, when you have an overhang of a regulatory action which is removed and trade frictions removed, so any capital formation is always accelerated with the removal of, number one, uncertainties, number two, the investment decisions will be spurred, and there will be a greater predictability on the capital to go for that, and it will also have a salutary movements on the exchange rate, which also bring in stability and predictability. So in the overall situation, I would say that with the deals that have been done on the trade side, a lot of uncertainties have been removed.
Absolutely. That was SEBI chairperson Tuhin Kanta Pandey speaking about, the STT hike and the rationale behind it. On that note, it is time for us to slip into a very short break. You don't go anywhere. We will be right back.